All right, let's jump right in. Stock futures are ticking up this morning, but it's not your usual earnings beat or data drop. Nope. The entire market is buzzing about one thing, a single, huge announcement that could totally shake up the global tech supply chain. A brand new, massive tariff on semiconductor imports. Let's break down what's happening.
And there it is. That's the quote that sent a jolt through the markets. With just that one sentence, President Trump basically drew a new line in the sand for global manufacturing. It's a huge deal. So, what are the actual details? Let's get into the fine print. So, first up, the new 100% chip tariff. You know, the real story here isn't just the headline number, it's about who gets a hall pass. I mean, look at that number. 100%. That's not a small adjustment. It effectively doubles the cost of imported chips for a lot of companies. It's a massive lever designed to force a change. But the real twist, what makes this so interesting, is the accept. And here's that twist. There's a complete waiver, a total pass for any company that's building in the United States or it's already promised to. This creates a giant safe zone for companies like Apple. They just pledged an extra $100 billion to their U.S. suppliers. That puts them squarely in the tariff-free zone.
Okay, next section, how the markets reacted. So you had the cause, the announcement, and the effect was instantaneous. And you can see exactly who the market thinks the winners and losers are just by following the money.
The reaction in pre-market trading was just a sea of green. Futures for all the major indexes shot up. And look at that, the tech-heavy NASDAQ 100 led the pack. Which, of course, makes perfect sense, right? The policy is all about chips, so investors immediately started betting that the U.S. tech sector was going to come out on top. And here's that exemption we were just talking about playing out in real time. Apple stock popped nearly 3% in after-hours trading, and that's on top of an already strong 5% gain. Investors weren't just guessing here. They were making huge bets that Apple's strategy of spending more at home makes it totally tariff-proof.
And that good feeling even spilled over into energy. Both of the major oil benchmarks, Brent and WTI crude, they both ticked up over 1%. Now, this wasn't a direct result of the chip policy itself, but it's probably a sign that traders saw the news as a good thing for the overall U.S. economy, and a stronger economy usually means more demand for energy.
So let's zoom out for a second and look at the broader picture. This positive news didn't just pop up out of the blue. To really get why it had such an impact, you have to understand what the market mood was like right before this all went down.
And honestly, the market was desperate for some good news. Coming into Wednesday, the S&P 500 had been down 5 of the last 6 days. So this tariff news wasn't just some small bump. It was a genuine trend breaker. It snapped a pretty stubborn losing streak. But here's the really weird part, the paradox of the day. You've got these major policy bombshells dropping, but as Christian Kerr from LPL Financial points out, overall market volatility is at its lowest point since last June. It's kind of this eerie calm in the middle of a policy storm. It suggests the market is either really confident or maybe a little too complacent.
And the chip tariff wasn't a one-off thing. It seems to be part of a much bigger, more aggressive trade strategy. On the very same day, the administration also hit India with a 25% tariff because they kept buying Russian oil. It's a clear signal that tariffs are a tool being used for multiple geopolitical goals.
All right, Section 4, Other Company News. Because while all this tariff talk was happening in Washington, the gears of corporate America just kept on turning. There were a few key earnings reports and some deals that also shaped the day's market story.
After the bell rang, earnings really told a story of a split economy. I mean, look at this. Companies that live in our digital world just soared. DoorDash jumped 6%, the learning app Duolingo rocketed 14% on a fantastic forecast. But then you have companies tied to real-world travel, like Airbnb, and they struggled, dropping 7% on a pretty cloudy outlook.
Elsewhere, a couple other things to note. The market for new companies is still hot. The rocket maker Firefly Aerospace priced its IPO above expectations, giving it a valuation over $6 billion. And then, in a classic activist investor move, the firm's Starboard Value took a 9% stake in Rogers, which basically signals they're about to start pushing for a big shakeup over there.
So where does that leave us? A major policy shift and a strangely calm market. What are the data points that are going to tell us where we're headed from here? Let's talk about what to watch next.
Okay, keep your eyes on two things. First, the hard economic data. Weekly jobless claims and Q2 productivity numbers will give us a real-time health check on the economy. And second, more earnings from some huge companies like Eli Lilly and Warner Bros. Discovery. That's going to tell us if the confidence we saw today is actually holding up across different parts of the economy.
And so we're left with this puzzle, right? A dramatic new tariff met with this strangely calm market. It really boils down to the essential question for every investor right now. Is the market correctly pricing in these America First exemptions and betting on U.S. strength? Or is it dangerously underestimating the risk of a new global trade war? The answer to that question, that's what's going to define the market's next big move.